I'm Eduardo Bogosian. I'm the founder and CEO of Maestri Investment Group, and today is our annual reunion. So I would like to talk to you about what's going on at the markets right now, because this is something really important and it's completely different from the previous 4 years we've been around. And today is February the 24th. I'm so sorry, January the 24th, 2022. So starting out, the IPF had a yield of 51.61% in 2021. The IPF X2 had a return of 92.32%. All these numbers according to our brokerage, partner brokerage, FX Open. The MIG dollar had a 221.62% return, and the MIG dollar X2 had a 282.74% return for the year of 2021. So great numbers, obviously. And if you are some of the few who've been watching, you see we added two new accounts, the MIG Crypto and the MIG Euro. Now, these are both brand new, and the MIG Crypto, let's go alphabetically. It just started. It follows basically the four major cryptocurrencies that can easily be exchanged for dollars. So we're talking Bitcoin, we're talking Ethereum, Litecoin, and Ripple. Those are the four that we're currently invested in. And the MIG Euro, which is the FTSE 100, whereas the derivative that we actually trade, the UK 100, so the 100 largest companies by market cap, listed on the London Stock Exchange. And we're trying to take a look to see if we can add in a bit of a mix with the DAX 30, which would be Germany's 30 largest, with the Berlin Stock Exchange. Now, we had a problem with the euro in that the algorithm ran into an error and started trading and wouldn't stop. Now, there is a safeguard in place that was supposed to notify us of any excessive trading, but it did not go off. So, in response to that, we have fixed the issue that caused it, and we have also increased our safety by adding in safeguards along the way, and these are being implemented throughout the board in all of the accounts that use this algorithm. So we're making sure that this cannot physically happen again. We also ran into an issue regarding contract size, because our brokerage decided to offer the S&P 500 as a 100 contract for one normal lot size instead of the traditional 10, which is what all of our other contract sizes are. So with the MIG dollar, the IPF, all of them are 10 contract lot sizes, and they have this one that's different, which is 100, which caused us to be over leveraged, and that was what caused the recent issues, and that has since been fixed. It cannot happen. As I said, we made sure that these safeguards were put in place and they're being used throughout the board. Okay, but there is one thing that is systematic, and it's the greatest buying opportunity since the beginning of COVID and the big drop back in 2019, if I'm not mistaken. That would be around April. Let me take a quick look. I think it was around April or March. We had a huge drop. Yeah, that would be 5. So yeah, May. In May 2019, there was a great drop We made a ton of money there, and it's happening again. So what's happening with the US stock market is that the Fed is planning on raising its rates to try to keep inflation down, even though um, some people saying it's too late, other people saying it's too soon. It doesn't matter. The point is it's happening, and it's happening now, which led to the Nasdaq having its worst month since 2008, aka the best buying opportunity. The next 6 months, so this quarter, from January, February, March, and then April, May, June, these first 2 quarters, these first 6 months are presenting themselves as an incredible buy opportunity. People who are over leveraged, or I should even better say, they have exceeded their risk appetite and overexerted their portfolio into tech stocks, and we're seeing this with Bitcoin down to $36,000. Yet the year is still poised to have a positive gain. So we're saying what we're seeing right now, it could change. I'm not saying it can't change. I'm saying what I have in ways of information now is that this is a huge buying opportunity. Do not sell in fear. Follow whatever it is that your portfolio, whatever your goals are. Now is not the time to sell. Unless you want to lose money, in which case I thank you, you're lowering the price, I'm just going to buy it off cheaper. Okay? So if you are a Maestri investor already, what we're currently doing is we're dollar cost averaging, as always, and we're going to be increasing that for this first half of the year because it is simply such a phenomenal buying opportunity. I mean, we are looking right now, if I were to get, for example, the Nasdaq. With our instruments, I mean, we're seeing, well, this, all right, pardon me, down as far as 15%. 15%, you know what that's going to be on the rebound? I mean, okay, we're going to see a quick rebound, probably. That's usually what happens. We're going to have a quick rally up and then back down. That's why I'm saying this first 6 months, just to be sure. But we're at the same price level we were, what is this, 2, 4, 6, 7 months ago. Imagine being able to go back in time 7 months and buy then. Things going back to what they were now, 16% up. So first off, we are not selling or removing positions. We are going to take advantage of this great buy opportunity. The market, in our analysis, is a bit overreacted. If you look at the S&P, we're down about 300. What is that? Let's take a look. At the moment, it's down about $400, and the Nasdaq is down a whopping $1,600. So if someone came up to me and said, "Hey, do you want to get this $1,600 off?" Heck yeah, I do. So I hope that I have cleared up what our error was with the MiG Euro account. That has been fixed. The IPF and IPFX2 should all be in perfect working order as it was before. It's a setback nonetheless, but we have found the issue. It was not something that was too complicated. We were able to identify that pretty quickly. We just had this unfortunate timing. However, with a positive outlook for 2022 and this incredible buying opportunity, our best eyes right now is to not sell and panic. Stick to your portfolio goals and what your portfolio plan is, and dollar cost average is king. I mean, if you have any doubts on that, just look at our previous 4 years, and I'm just going to go out on a limb and say also check out our next 4 years dollar cost averaging. Now, we would like to thank especially our investors who dollar cost average with us, who even throughout all of this are still positive in the triple digits percent-wise. And no, these are not $5 accounts. Obviously, I cannot say how big the accounts are, but you can look for yourself and see that they are several $1,000s. And we could just as well replicate this up to about a couple million, few million, and then we start running into problems when we really have a few hundred million. But by then, if you have a few hundred million, what really are your issues? Not as many as someone who only has, a couple million. So thank you so much to our investors. We'd like to remind you that we do invest with you, not despite you, like banks do. We do not have we don't work with assets under management fees, which means that we make money when you make money, okay? And if it's down, we're not making money. When it's up, we are. And we've been up 4 years, and markets go up and down all the time. Dollar cost average is king. See you guys next year.